Good morning, traders. Hope you're all doing well. This is the third video in the mini series, and I'm going to be looking and talking about the daily bias and how do I determine the daily bias if it's possible, if it's a good day to see a daily bias. Because you have to remember, some days there's just nothing to look at. Some days there isn't a daily bias. So we'll be looking at what is the optimal conditions to identify a daily bias and how do we incorporate that with what we've previously seen in the liquidity profiles and the weekly liquidity pools. So the liquidity profiles is very important because that gives us the where is liquidity, what is it, what do we look for. The weekly liquidity pools are very important. The second video, because that gives us an indication of where price could potentially be reaching for on the weekly for the current trading week. So that's also a very important thing to look at. So now, the third and obvious step is in the daily. How do we know where are we heading to on the daily? Well, obviously we'll be looking to trade in the direction of the weekly, but there's a few things we need to consider then on a daily basis and then on the daily time frame. So we'll be looking at that in this video. So let's jump right into it. So just let's start with GU on the daily. Obviously price is moving and trending or it's consolidating. And there's a lot of information to look at. I mean, you can possibly plot zones and support and resistance and order blocks, and there's 1,000 different things that you can do. But the question always remains is how far back do I need to look in order to create my zones? How far back, and where is the high that is most relevant? Where is the low that's most relevant? Like, all these questions are very important questions and questions that we need to ask ourselves and questions that we need answers for in order to trade successfully. So remember, on the weekly we've plotted the liquidity. We do the same thing on the daily basis as well, on the daily candle, on the daily time frame. But first of all, we need to check the range that we're currently trading within. To do that, we go to the 1 hour. We, on Monday or Tuesday, whatever the day is, we use this tool on the left, let's get it, the FIB time zone. I'm going to quickly show you the properties. This is the settings. We want 20, 40, and 60. You can change the colors, whatever you want to do, and you can just copy these settings. That's nothing, that doesn't matter. That doesn't matter. That's only the style. You can change the color as you wish, but we want 20, 40, and 60. So basically what you do is you place the first dot at 7 or 6, depending on the time, if it's daylight savings, but currently it's 7 a.m. GMT plus 2 to 7 a.m. GMT plus 2. Now when we look at the 4 hour, we can know where is the last 20 days of trading. It's up until this line. The last 40 days up until this line, and the last 60 days up until this line. So primarily we want to be focused on the high and the low created in the last 20 days. So we know that this is the highest high created in the last 20 days, and this is the lowest low created in the last 20 days. So now technically this is the most relevant high low and the most relevant high in the last 20 days. And that is then where we base off our trading range. This is the current range that we're trading off. So we technically only need to be concerned with what is happening currently on the screen. We don't need to be concerned with all of this. With day traders, intraday traders, that's all that we need to be concerned with. And that is what we most of the time will be using. So now we can still plot our premium and discount on this, and we can see that currently we are in discount, the blue area. We're in discount, and we always move from discount to premium. So long term, we would be looking for any liquidity areas from the liquidity video up in the premium. So first of all, we can identify that we have the previous high over there, and we also have a small little order block in there as well. So it's easy to identify and see now where price is potentially going to be heading to next up until this era. So now already I'm starting to develop an idea or a bias that price is potentially moving towards the upside because of the rejection that we're already seeing in here. And now we can potentially expect price to move up. So we can obviously identify areas like this. This is a nice full body candle. some imbalance over there. But what is the problem? It's still in the discount. So potentially, yes, we could see price moving up, but then expect a reaction, a pullback, and then a continuation further towards the upside. So if you get in on a trade down here, you can have the confidence and the patience to try and wait for price to reach up into the premium area. We have these highs, and then we have some stuff on the left as well. So those are then the areas that we could potentially be looking for price to reach for if we decide to turn bullish and not bearish anymore. So remember the liquidity concepts, we can still apply them. By looking at the 1 hour, we still apply those liquidity concepts, but more on that in just a bit. So what we need to now look at, if we look at the daily, we need to plot those liquidity areas on the daily of this range. So those are the 4 hours. You can still keep them on, but for now, we're looking at the liquidity areas within on the daily time frame. So let's just get this sorted out. So where is the liquidity in the premium area? So first of all, we're looking at some imbalance. So where is the imbalance? Well, obviously we can see we have this high in the premium, and it's very obvious. So that is the first one. Then we can also identify some imbalance. We have a small amount of imbalance still in there that is untapped. So we can just drag that out. We have imbalance. And then we have this previous high as well, which aligns with the order block. You can see it perfectly taps and taps, so we can keep that on there as well. We can just take this away now. So now on the daily, we already have our liquidity areas marked out. There's no imbalance in there. There's no order block. There's no previous high in this leg towards the downside. So potentially we could see price moving up into this area, grab the liquidity above this high, tap the imbalance, and then only see a reaction for further downside. But that's for later stages. We don't need to be concerned with that. So now we've marked out our daily liquidity areas. We can transpose that and align it with the weekly, and we can see where it aligns. So we can just know, we can change the color, whatever. You can say that yellow is for the daily, and you can know that this is daily imbalance, and you can obviously, you can't type, but you can probably just put a note next to it that this is the daily imbalance. Now, the last thing we need to do is then look at the 1 hour. So on the 1 hour, we obviously, like we did on the weekly, need to identify where is our areas of liquidity. And for this, we can see that there's a previous high. There we have liquidity. We can just mark it like so. Liquidity. We can note that these lows are now liquidity as well, and potentially price is now going to be reaching for one of these areas. So this morning I was looking for price return to this small order block over there. But price did not reach for that area, and instead started pushing up. Now we can adjust and we can see, okay, we have a structure break over there. Where did this structure break originate from? Well, it happened from this candle. Let's see the time frame where we have a full body candle. None of these areas, maybe the 1 minute potentially, where we have another structure break over there as well. So I'm getting a bit ahead of myself, but on the 1 hour, look at the lower time frames in just a bit. But on the 1 hour, we need to identify where is the liquidity, where is price reaching for. So we now know where is price immediately reaching for, and from there on out, we base our trades and look for the entries, which you will learn later on in this course. So first of all, we need to identify where is the 1 hour liquidity. The same way we did the 4 hour, the daily, and the weekly. We apply the same concepts, apply the same principles to it. We're already seeing now prices breaking structure, so we're already seeing the intent. So we can always just now look for that pullback, creating a new higher low, get in on the downside, add a new high low, and then take the trade towards the upside. So that's the basics of it, and that's the gist of it. So we now know how to form our daily bias. So for this daily bias, we're looking for longs. That is the ideal thing that we're looking for that long positions. We can apply the same thing tomorrow. We apply again the look back. We'll be looking at new days 7 a.m. Let's just go to the 1 hour. It's easier to do it on the 1 hour. We can look at the new 7 over there. The next 7, which is over there. So then we will see if our 20 days adjusted and where is our new highest high and lowest low. This way we just continue to move on in this line. We'll continue to move on and on and on and on and on until we get new price action, and it will develop like that. So guys, I hope it makes sense and that you guys understand the gist of it and how we will be looking for entries and framing the daily bias according to what is seen. So once we know the daily bias, we will then look at lower time frame concepts and lower time frame elements to base off the trades, and we'll be looking at that in the coming video. So be patient, practice what I've shown you. We can go to the time frame, the high time frames. You can use the playback tool and go back, use the tools that I've just shown you, look at where's your highest high, lowest low in that 20 days, and start framing your trades and direction as I've shown. Look at the liquidity and always align it with what the weekly is telling us. So for example, let's have a look. Another reason why I'm bullish in this example is if we look at the weekly time frame, we need to identify what is happening on the weekly. So let's just quickly hide all of this, and we create this and we just call this the daily. Let's hide it. So on the weekly, where is the liquidity on the weekly? Well, so we can look at the leg down that broke structure. There is the break of structure, and this is the leg towards the downside. So in this leg towards the downside, we can also identify where is our imbalance. We can identify the imbalance. That is the first area of liquidity in the premium. Remember, what is the order? We're looking at imbalance, order blocks, previous high. So there's our imbalance, there's the order block, and then obviously we have the previous high over there. But first of all, for us now, the area of interest is up there. That is the area I'm looking for price to reach to on a weekly point of view. From a weekly point of view, it doesn't mean price will reach. Now potentially we don't yet know price is creating the low. Price could potentially just pull back and then push down further, but we'll just adjust this level and make sure that we're always targeting the premium once price starts to push towards the upside. So for now, since price is giving us an indication that it's moving towards the upside, that is the weekly target, and that is the weekly area that we'll be looking at. Obviously, we have previous highs in here that price could be reaching for, and we have previous daily highs, previous day's high as well. So those are all areas price could definitely be reaching for. But ultimately, the main target would be this imbalance because it's on the weekly swing towards the downside. It is the first area in the premium that is our liquidity zone. I hope that does make sense. We can then just group this. We can give it a new name. We can name this weekly. So you can always go to your weekly, go back, refer to this, and get an indication of where price is potentially heading. Back on the daily. No, man. Sorry, guys. Back on the daily, we can just apply the daily, and we can potentially see where price is heading to on the daily, and we can overlay that with the weekly and get a clearer picture of where price is heading to. So that's just a smart way of organizing your tools and organize your things and getting a clear picture of what is happening. So the next mini lesson video I will be doing is talking about these ranges. So when, where, how do you use it? So I'll go a bit more in detail in the next video on these ranges. So in general, the idea is to look at the leg that broke structure. For instance, here we have a structure break, and this is then the leg down that we look at, and we're looking at price to come back in the premium to react off of an order block. There we have it. Very simple, very straightforward. That is the general idea of these ranges, but in the next video we'll look at that in more detail. Guys, that is it from me for this video. Hope you enjoyed it. Hope it makes sense. Trying to keep it not too long for you to easily watch it and digest it. Hope you have a wonderful day. See you in the next one. Bye.